Preparing for a KYC analyst at MUFG interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through your understanding of the KYC analyst role at a global bank like MUFG. A KYC analyst verifies who the client is, understands the nature of their business, identifies ownership and control, and assesses financial crime risk. At MUFG, I would expect the role to involve onboarding and periodic reviews for corporate and institutional clients, screening against sanctions, PEP and adverse media lists, and escalating red flags. The goal is to support business growth while ensuring the bank meets AML, CTF, and regulatory obligations. While answering, focus on client onboarding, periodic reviews, CDD, EDD, sanctions and PEP screening, documentation quality, risk ratings, and how KYC protects the bank from financial crime and regulatory breaches. Question 2. What are the main differences between CDD and EDD? CDD is the baseline review performed to identify and verify a customer, understand ownership, business activity, and expected account behavior. EDD goes deeper when the risk is higher. For example, if a client has a PEP connection, operates in a high-risk jurisdiction, or has a layered ownership structure, I would gather additional information, review source of wealth or funds, and document why the relationship is acceptable or should be escalated. Make sure to cover standard due diligence versus enhanced scrutiny when EDD is triggered. Examples such as PEPs, high-risk jurisdictions, or complex ownership, and the importance of documenting rationale. Question 3. How would you identify the ultimate beneficial owner of a corporate client? I would start with the ownership structure chart, constitutional documents, shareholder registers, and reliable public sources. The goal is to identify individuals who ultimately own or control the entity, often using the bank's threshold, such as 25% ownership, though local rules can vary. If no individual meets the ownership threshold, I would look for control through voting rights, management influence, or senior managing officials. Then, verify and document the rationale clearly. In your answer, talk about ownership thresholds, control structures, shareholding documents, registries, layered entities, trusts, senior managing officials, and the need to verify information from reliable independent sources. Question 4. What red flags would you look for during a KYC review? I look for inconsistencies between the client's documents, public information, and stated business model. Red flags include complex ownership without a clear commercial reason, links to sanctioned countries, negative media involving fraud or corruption, nominee shareholders, and reluctance to provide basic documents. I would also question expected transactions that do not match the customer profile. My approach is to investigate, document evidence, and escalate where the risk cannot be comfortably mitigated. Be sure to mention inconsistent documents, opaque ownership, nominee arrangements, shell companies, adverse media, unusual jurisdictions, unexplained source of funds, reluctance to provide information, and activity that conflicts with the stated business profile. Question 5. How would you handle a client that is reluctant to provide KYC documents? I would first explain that the request is not optional. It is required by regulation and internal policy. I would work with the relationship manager to communicate clearly what is missing, why it is needed, and by when. If the client still refuses or delays, I would document each outreach attempt and escalate through the appropriate channel. I would not approve onboarding or review completion unless minimum KYC requirements are satisfied. While answering, focus on professional communication, explaining regulatory requirements, coordinating with relationship managers, setting deadlines, documenting outreach, escalating delays, and avoiding onboarding or continuation without sufficient due diligence. Question 6. What is a PEP, and why does it matter in KYC? A PEP is someone who holds or has held a prominent public function, such as a senior government official, judge, military leader, or head of a state-owned enterprise. Their close family members and associates can also create risk. PEP status matters because of elevated corruption, bribery, and misuse of public funds risk. It does not automatically mean rejecting the client, but it does require EDD, senior approval, and stronger ongoing monitoring. Make sure to define politically exposed persons, include close associates and family members, explain corruption and bribery risk, and describe enhanced due diligence rather than automatic rejection. Question 7. How does sanctions screening and adverse media screening differ? Sanctions screening checks whether a customer, beneficial owner, or related party appears on restricted lists, which can create legal prohibitions or strict controls. Adverse media screening looks for negative news indicating possible financial crime, corruption, fraud, environmental crimes, or reputational risk. For both, I would compare names, dates of birth, addresses, countries, and identifiers to clear false positives. Confirmed or unresolved hits must be escalated before proceeding. In your answer, distinguish legal prohibitions from reputational and financial crime indicators. Explain true versus false matches, list matching data points, and mention escalation standards for confirmed or unresolved hits. Question 8. Explain how you would perform a periodic KYC review. A periodic review refreshes the client's risk profile after onboarding. I would confirm the legal entity details, ownership and control, business activity, geography, products used, and expected transaction behavior. Then I would run updated sanctions, PEP, and adverse media checks, compare current information against previous records, and identify changes. If new risks appear, I would reassess the rating, request extra evidence, escalate if needed, and leave a clear audit trail. Be sure to cover refreshing client documents, checking ownership changes, reassessing risk rating, reviewing screening results, validating expected activity, resolving gaps, and documenting a clear conclusion for audit purposes. Question 9. What factors influence a customer's AML risk rating? AML risk rating is driven by who the customer is, where they operate, what they do, and how they use the bank. A regulated listed company in a low-risk country is usually lower risk than a private trading company with complex offshore ownership. Key factors include industry, jurisdictions, PEP exposure, sanctions links, adverse media, product risk, and transaction patterns. Controls and due diligence then reduce inherent risk to a residual risk view. While answering, focus on customer type, industry, geography, ownership complexity, products and services, transaction behavior, PEP exposure, sanctions proximity, adverse media, and the difference between inherent and residual risk. Question 10. How would you deal with a potential sanctions name match? I would treat it carefully and avoid making assumptions based only on a similar name. First, I would compare all available identifiers, date of birth, address, nationality, registration number, ownership links, and geography. If the details clearly do not match, I would document the false positive rationale. If the match is confirmed or uncertain, I would escalate to sanctions compliance immediately and avoid onboarding, processing, or contacting the client in a way that could create tipping-off concerns. Make sure to explain first-level analysis, comparing identifiers, avoiding assumptions, documenting false positive rationale, escalating true or uncertain matches, and not tipping off the client or proceeding prematurely. Question 11. What KYC documents would you typically request for a corporate client? For a corporate client, I would typically request a certificate of incorporation, registry extract, articles or memorandum, ownership structure chart, shareholder register, director list, and authorized signatory evidence. For beneficial owners and controllers, I would collect identification and verification documents as required by policy. Depending on risk, I may also need proof of operating address, licenses, financial statements, tax forms, source of funds information, and evidence supporting the stated business activity. In your answer, include incorporation documents, registry extracts, ownership charts, shareholder registers, director information, authorized signatories, beneficial owner IDs, business activity evidence, tax forms, and jurisdiction-specific requirements. Question 12. How do you assess source of funds and source of wealth? Source of funds explains where the money for a particular transaction or account activity comes from, such as operating revenue, loan proceeds, or asset sale proceeds. Source of wealth explains how the client or beneficial owner accumulated overall wealth over time. For higher risk clients, I would seek credible evidence like financial statements, contracts, sale agreements, inheritance documents, or audited accounts. The key is checking whether the explanation is logical, supported, and consistent with the profile. Be sure to distinguish transaction-specific funds from overall wealth creation. Give examples of evidence, link the depth of review to risk, and mention consistency with client profile and expected activity. Question 13. Tell me about a time you found an error or inconsistency in documentation. What did you do? In a previous documentation review, I noticed the client's ownership chart showed one shareholder at 30%, but the registry extract showed 20%. I paused the review, checked the latest filing date, and contacted the relationship team for clarification. It turned out there had been a recent share transfer not reflected in the internal file. I updated the ownership analysis, requested supporting evidence, documented the change, and added a checklist step to compare dates across documents. While answering, use a STAR structure, show attention to detail, explain how you verified facts, communicated with stakeholders, corrected the file, and prevented recurrence without blaming others. Question 14. How would you prioritize multiple KYC cases with tight deadlines? I would prioritize based on regulatory deadlines, risk level, client impact, and dependency items. For example, an overdue high-risk periodic review or sanctions-related case would take priority over a low-risk refresh with no immediate business impact. I would maintain a tracker showing status, blockers, and next actions, then communicate early with relationship managers and compliance. Speed matters, but I would not close a case without required evidence and proper documentation. Make sure to cover risk-based prioritization, regulatory deadlines, high-risk cases, business impact, SLA management, transparent communication, tracking tools, and not sacrificing quality for speed. Question 15. What is the importance of an audit trail in KYC? An audit trail shows how a KYC decision was reached. It should evidence the documents reviewed, screening results, risk assessment, approvals, escalations, and rationale for conclusions. Regulators and internal QA teams need to see not only the final answer, but the reasoning behind it. If a file says a client is acceptable but does not support that view, the bank carries regulatory and reputational risk, even if the customer is legitimate. In your answer, emphasize traceability, regulatory review, internal quality assurance, evidence of judgment, approvals, screening outcomes, document versions, and why unsupported conclusions create risk for the bank. Question 16. How would you explain AML and KYC to a business stakeholder who sees it as a delay? I would explain that KYC is not just a compliance formality. It protects the bank, the client relationship, and the financial system. If we onboard a client without understanding ownership, sanctions exposure, or business activity, the bank could face regulatory penalties and reputational damage. I would still be practical by clarifying exactly what is needed, why it is needed, and how we can obtain it quickly without compromising standards. Be sure to show stakeholder management, commercial awareness, regulatory necessity, risk protection, clear communication, proactive document requests, and collaboration with front office rather than treating them as an obstacle. Question 17. What would you do if the relationship manager pressures you to approve an incomplete KYC file? I would stay professional and explain the specific gaps preventing approval, linking them to policy or regulatory requirements. I would try to help by suggesting alternative acceptable documents or fast escalation routes, but I would not approve an incomplete file just to meet a business deadline. If pressure continued, I would document the situation and escalate to my manager or compliance. In KYC, judgment matters, but minimum standards are non-negotiable. While answering, focus on integrity, policy adherence, respectful challenge, documenting gaps, offering solutions, escalating appropriately, and showing that commercial pressure cannot override regulatory requirements. Question 18. How do you stay updated on AML, sanctions, and KYC regulatory changes? I stay current through a combination of internal and external sources. Internally, I would rely on policy updates, compliance alerts, training sessions, and case feedback. Externally, I follow regulator updates, FATF guidance, sanctions announcements, and credible AML publications. The important part is applying updates in real work. If a jurisdiction, typology, or sanctions requirement changes, I would adjust screening, documentation requests, and escalation decisions accordingly. Make sure to mention internal policy updates, compliance briefings, regulator publications, FATF guidance, sanctions list updates, training, industry newsletters, and applying changes to daily casework. Question 19. Why do you want to work as a KYC analyst at MUFG? MUFG appeals to me because it combines a global banking platform with a strong risk and control culture. As a KYC analyst, I would be working on meaningful client risk decisions, not just checking boxes. I like roles that require investigation, attention to detail, and communication with front office, compliance, and operations. MUFG's international client base also makes the work interesting because jurisdiction, ownership, and product risks can be more complex. In your answer, connect MUFG's global banking footprint, Japanese risk culture, institutional client base, compliance importance, your analytical strengths, and your interest in financial crime prevention and stakeholder-facing work. Question 20. If you found adverse media on a beneficial owner involving fraud allegations, how would you proceed? I would first confirm the media relates to the correct individual by checking identifiers and relationship to the client. Then I would assess the credibility, date, severity, and outcome of the allegation. A recent fraud conviction is very different from an old, unproven allegation in a weak source. I would document the findings, consider whether EDD or risk rating changes are required, and escalate to compliance or financial crime for a decision before approval. Be sure to cover validating source credibility, understanding allegation severity and recency, linking the individual to the client, documenting findings, reassessing risk, requesting context if appropriate, and escalating for compliance review. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.